What's going on, guys? It's GBP baby. Welcome to another backtesting video. Oh, I think you can hear my lo-fi. Right, cool. Welcome to another backtesting video. Hopefully you've watched the one before this, because I'm continuing that series. We're looking at the 1 minute. We're going to be looking at macros mainly, and we're going to be looking at the most recent week of August. So week commencing the 31st of July. Yep. So yeah, we're working on Wednesday's price action now. And I'm just going to get straight into things. Yeah, let me just draw out this Asian range really quickly. Wow, we've already got it marked out, but I'm just going to... There, we've got the low, the high. So you can see we went for the low first. This time we go for the low of the Asian range. So this is sell side liquidity, which also happens to be the old sell side liquidity, which we've already taken. So I'm going to delete that because that's already been tagged. But you can see we have sell side liquidity resting here. And then we can anticipate us running for the buy side of the Asian range, which is exactly what happens. We run up and take out Asia's high. What is this? This is buy side liquidity, and we can put that center, and we can also put / Asia high. And we can put / Asia low. Cool, so let's look at our to kill zone. You can see we trade into it. We then take out this run here. This technically acts as a breaker, low, high, low, low, but I guess this is more so the breaker, because this is more of a significant high, because we have a short term. The reason this candle makes the breaker high and not this candle makes the breaker high is because this candle has a short term low, short term high here, and a short term high here, whereas this candle doesn't have a short term high here and a short term high here. It has a short term high to the left but not to the right. You can see we break right up, so this makes this candle the significant swing high, which makes this move here the breaker. So we've got low, high, and then a low, low here. So we can look at this as a breaker, and then we can anticipate price to trade back to it, which it does. So let's just write out breaker. But wow, I mean, here's the thing. Low, high, low, low, break. Am I doing this right? Hold up, guys, sorry, let me figure this out. We have a low, we have a high, and we have a low, low, and we break. So the breaker is, I guess it's the move down, isn't it? Is it the move down? I can't remember. I believe this should be the breaker. Yeah, this last candle for the move down, yeah, cool. But you can see this acts as a breaker as well, low, high, low, low. And you can see we trade to it here. And we create a fair value gap at the same time. Do we trade to it? No, we don't. Interesting. Never mind. Right, I'm just going to leave that as is. Sorry guys, I'm waffling right now. So we can be buying all through this if we're anticipating higher prices. We have a breaking market structure here. So let me just make that clear. Break on market structure B.O.S. Make that black. So we have a breaking market structure here. We then find support, and then we continue higher. We do have a fair value gap, but that doesn't get traded to, so this can act as a breakaway gap. But yeah, hopefully you guys enjoyed the last one. I think the last one was quite good. I enjoyed doing that one. Breakaway gap, cool. And then we have a bigger break on market structure here. Now, buying in the breaker on the way up is risky, but I say risky, but it's, you have to know where price is running to be able to do such a thing. So I'm not actually I'm going to put an entry here, because this pullback into this small breaker here, which technically is a breaker, could act as an entry. So I'm going to put breaker, and I do want to quickly see if it does trade to it or not, because if it does, then I think it should. the low of this is 1.27651 and the high of this is 1.27651. Yeah, so this gets traded too. So it is a breaker. I was gonna say, although it didn't trade into it, it traded to it, and that's what makes it a breaker. Low, high, lower, low, trade up, come down, touch it, and then what happens? We expand higher. So this is an entry technically. We anticipate price to trade back to that breaker there. So let's put a buy. And I know it seems crazy. It must seem crazy to do such a thing, as in, you know, live trading. But it is something that I'd like to learn to do, because at the end of the day, it's an entry is an entry, and that would count as one. So put a buy there. And then where are we buying to? Well, where do we have a swing high? This is the next significant swing high. So we can let go of some of our stops above there. And remember, we anticipate the Asia high to get taken. So we have these highs as well for buy side liquidity. But a better option, if say we miss this entry onto that buy side, this pullback into the breakout would be the better buy. So we can put a buy here. And let's look at how price respects the 50% level. Make it red and dashed. There we go, and price comes down. And then we expand higher again. Break on market structure. Where do we have a breaking market structure? Here. This break here, so we pull back into this bullish order block. If I'm moving too fast, guys, I don't know, slow down the video. But to be honest, if you've watched my other backtesting videos, you'll be used to this. So I suggest, if this is too fast for you, go watch my other backtesting videos, and some of them I'm probably going through them a lot slower than this. But let's look at how we traded to the 50% level of this as well. This order block, mean threshold 7.4. Cool, and then we have another entry here, fair value gap. So these are all entries, guys. Like, these are all times you could have been buying. Into this buy side liquidity, which is also, and the Asia high, sorry. So we can let some of our stops above this swing high here. And then we let go of the rest above the Asia high as soon as it touches it here. Cool, and then what happens? Breaking market structure. Beautiful breaking market structure here. When I say beautiful, it's when you see an energetic move like that, that's what I like to see. Now, although this is a macro, I don't see any, anything worth trading here. I would like to enter a short here. However, you can see we do actually trade above the high where my stop loss would be. So, you know how it is. B.O.S. break of structure. But you can see we don't actually take out this high. So that's quite interesting to me. The fact that we show a breaking market structure, but price consolidates in this range from this low to this high to this low. So we keep consolidating. So the fact we don't take out this high, I'd then probably look at how we trade within this range. Let's see how we trade within this range. Oh, take it out here. So I'm just looking at this range, guys. Interesting. So this range where we're let me do the bodies. The range where we're consolidated in, you know, back, forth, and we leave it between 5 a.m. and 7 a.m. We leave it. Then we pull back into it. And then where do we pull back to? 50% of it. So let's mark out the low to the high of that range. Drag out the 50%. And then make it dashed. And you can see we trade back to the 50% of it. Interesting, isn't it? So where do we have next breaking structure? Here. And then as the New York session starts at 7 a.m. we trade into a fair value gap after a breaking market structure, so that would offer us another entry. Convenient, isn't it? B.O.S, break of structure, and then we have another entry in this fair value gap, which is also in the breaker. Y high, low, high, high. So this is a breakers. Breaker paired with a fair value gap. And then we want to sell. And where am I looking? Remember, overall, my bias was all the way. I know it's crazy, but I did anticipate us trading to this. This is a massive 4-hour fair value gap. This is, so that would have been a beautiful entry. So then we break lower. We have another breaking structure here, and we have another fair value gap here, which gets traded into. Do we have another breaker? We should do. Let's see. Yeah, we do. I'll show you. Low, high, low, low. Here's the break. Here's another break that closed there. So this would be the entry, but this low to this high to this low makes a breaker. Because we got a high, a low, a high, a high, and a low. And I know this is one candle, but this is a breaker in here. I know it is hard to explain, but that is a breaker in itself, and you can see we respect that. Can't make this up, guys. Let me bring this one to the front. But I guess it's more like a mitigation, isn't it? I'm just trying to see. Bearish order block. Cool. Anyway, what happens? Price breaks lower here. We have a nice breaking structure there. So now from here on, this kind of move is what I like to see, though. This shows energy, you know. We have a slight one on stops here. Make that slimmer. And fair value up here. I'm just looking at potential entries, really. I mean, if we look on the high, sorry guys, because I'm looking at this, I'm trying to look at this from from the perspective that we're live. Like, what realistically would I want to trade, you know? But these are all fair value gaps anyway. Let's just mark out all these and recognize them. Bearish order block. So technically would all be classified as entries, because any kind of run, remember we're bearish, so any kind of run up, it should be a run on stops. I'm just thinking here, high, low, low, high, low, low, fair value gap. So this is an entry in itself, low, high, running. Does that run on that stops? It's quite difficult, isn't it? Right, anyway, price continues, blah blah blah. I like the look of this. Low, high, low, high, low, high, high, and then we break. And then we come back and touch the 50% level off that little range. Interesting, isn't it? And why am I looking at that range? Because again, these two candles show a breaker. Because we got a swing high, we got a swing low, and then we break higher. So we got a low, a high. No, we got a high, sorry, a low. We then got a high, high, and then we break down, make a low, low. So price should kiss it goodnight, and that's what we see here. So this is a bearish order block, bullish order block turn bearish order block, basically. But again, these are all quite advanced. Like, it doesn't really make sense for face value, does it? But let's put a sell there anyway. Look how we respect that fair value gap though, you know? Trade away from it, break structure here, come back into this order block. Respect the 50% level of it, by the way. You know? Break lower again, trade up to this order block. So this is all what you call immediate rebalancing. When price trades back to the previous candle like this, immediate rebalance. When this trades to this, immediate rebalance. When this trades, not that one. And this trade, yeah, but okay, those are two examples. But this is an immediate rebalance. This candle into that. So I'm gonna mark that out. Immediate rebalance. I'll make it orange. Orange, immediate rebalance. And these are all entries. ICT hasn't directly taught them, but he has spoken about them, and he has explained what it is when price trades back into the previous candle and then uses that to push away, and that's exactly what we're seeing happening. All this is the order block is an immediate rebalance because it's trading back into the old wick. I know what I'm talking about, guys. I promise. Immediate rebalance. I hope I do anyway. Immediate rebalance. And then we run. Again, any pullback, low, high, low, low. This is a breaker, Y, high, low, high, high, break. So that makes this candle a breaker. And what happens? We trade into it, and what happens? We continue lower. So let's mark that out as a breaker. Let's get another sell in over here because it's paired with a fair value gap, which is beautiful. High, low, high, high, break. This makes this now a breaker, so we can draw that low out. Do we trade back into it? No, we don't. But we do trade into a fair value gap that's created there. You know? So interesting. And then this is all pretty spotty price action, you know? This is in the macro as well. Remember, these are the macros. So this will be an entry in itself. These are all rebalancing. Immediate rebalance here. How am I recognizing this? I know what it looks like. I know a rebalance when I see one. That is one. Why is that a rebalance, Sean? This is a rebalance because we trade back into this candle and then we continue lower. This trade into that. So these are all immediate rebalances. And then consolidate-ish, blah blah blah, and then eventually we reach our target. Why do I want to let go of my stops? This video isn't as detailed as the last one, guys, but I am tired. It's freaking, it is 2:20 AM in the morning. I should probably go to bed. this was all from last video, by the way, so go watch that. But how long are we going? 20 minutes. So we got like 10 minutes before I'm gonna think about going. So we reach our target, and then we have a break in market structure, blah blah blah. And then we have a retracement. Does it go back to this breaker? I can imagine it does, like it did over here. It did the same thing. It did the same thing. Yeah, go straight to that breaker, which is like the midpoint of the range. Midpoint of the range. Interesting, isn't it? Turn back to equilibrium. We can anticipate that. And I was saying it did the same thing. Where did it do it? It did it here. When this returned back up to here, this break, there's a breaker here. Return straight to it. Midpoint of the range. Anticipate price to return to equilibrium. Cool. So would we buy? Is there any buys here? I mean, we have our breaking. Well, we reach our low, high, low, then we break up. As soon as we take out this high, I guess we have a significant break in market structure, but we can get in earlier in the macro. How? Well, as soon as this swing high gets taken, because this is the high after the low's made, we break that high there. That's a break in market structure, a significant break in market structure. And we run to that high, and then we have a fair value gap and an order block that we trade back to. So this could all be an entry, because we put as soon as that high is broken, we have a breaking market structure. So we're looking for buy side liquidity here, relative equal highs here, and then obviously you trade back into this massive breaker here, but there's also this massive fair value gap as well. So there's reason for price to want to come and close into that. And look at that. Can you make this up, guys? Can you make that up? It's an algorithm, bro. It is an algorithm. Right, break off structure there as well. But let's say we wanted to be buying this. So to be honest, in this kind of price action, I wouldn't buy until we buy into this. We have a proportion block here. We'll make this red, and we'll make this order block red as well, because these are all order blocks, and I want to show how price is stacking on each other on the order blocks. Beautiful, beautiful price action. So this is an order block that gets traded back to. This is an order block that gets traded back into. This is an order block that gets traded back into. This is an order block that gets traded back into. This is an order block that gets traded back into. So you can see how price keeps stacking and stacking, and what it's doing is creating a defense. ICT spoke about this before. In fact, I think I completely understand what he means now. He talked in one of his videos, I think it's in his mentorship. In one of his videos, he talks about how price is defending a certain level, and I think when it does this, it's defending this range. So price isn't going to come back down there. Then we have our expansion. We have relative equal highs here. These are all relatively equally high. So that makes the relative equal highs, guys, really not that hard to recognize. I remember when I was first learning about relative equal highs, I spent days just going through charts and marking out what looked like relative equal highs, and now I completely understand what they look like, because those are relative equal highs. Beautiful fair value gap left there that hasn't been traded to yet. We fill that in. So what I can love some of my position there. Is this 50% off the range? Probably. Let's find out. You can probably tell I'm tired. Right, visual order bring to front. Yes, it is. And look, so this is this range I was looking at, and look at that, 50% fair value gap. Beautiful. Premium. Beautiful. Beautiful place to let off 50% off your stops. So I'll make that orange, and then remember at 50% off a range, what do we anticipate? A run on stops. I'll say that again. At 50% off a range, we anticipate a run on stops. What do we see happening here? A run on stops. We come down, take out this sell side, and then what happens? Continue higher. You can't make this up, guys. You can't make this up. And look, we bounce on top of the fair value gap. This is what you now call an inversion fair value gap. Wow. Really not that hard, guys. I say that like I'm trading. I wish I traded this. But practice makes better. One on the stops at 50% of the range, so that's the entry in the south because the one on the stops. Or if we didn't want to enter there, we could always enter on this bullish order block right here. And that would therefore make this also this gap here, that would make this a measuring gap. That's the first time I've identified a measuring gap, because measuring gaps appear halfway through the range. What's our anticipated range? Well, this is the high I was anticipating price to trade to, so I need to draw out the range, and I want to mark out the 50% level. I mean, should it be this? I don't know if I should. Basically, I don't know if I should use this high or this high. I'd be more likely to use this one, but I'm gonna use this one. Is what it is, guys. Right, cool. Bullish order, blah, blah, blah. And then we can ride that up. Again, price stacking. You can't make this up. Every time I draw out these lines, guys, I'm just delineating fair value gaps. I mean, order blocks. The lines are delineating bullish order blocks, because it's really interesting to see how they stack. And then I'll take off my stops above. So we have all of these. We have a buy side liquidity, we have relative equal highs, and we have a breaker and a fair value gap, which all tips its hand to being somewhere we would anticipate price to want to trade to. And remember, guys, I'm learning just as much as you guys are learning here. You know. Would I be this? I don't like this consolidation. I hate it. Is what it is. It continues to respect this bullish order block. Then we take out that high, and then what happens? Breaking market structure. So what are we looking for now? South side liquidity. Where's the next south side liquidity? Well, down here. Does it reach there? Yes, it does. You can't make this up. Like, I'm just saying. Like, anyway, guys, I'm gonna get to bed. This has been going on for another 30 minutes. We do have this price action, which happened today, actually. Well, Thursday's price action, where we have the actual reversal. I do want to look into this, to be honest. I didn't trade today. I'm expecting higher prices now, but if you watch my recent video, my recent market review, you'll know exactly my expectations. But yeah, this has been GBP, baby. Thank you for watching. Don't forget to join the Discord where I'll be putting all the screenshots. In fact, let me go do that now. And yeah, I'll catch you in the next one. Peace.